Okay, guys, welcome. All the YouTube family, get yourselves in. Okay, get yourselves in. I'm giving a few moments. Started a little bit later than usual, but we're on. All right, so I'm going to give it a couple more minutes before we crack on. Okay. Get yourselves in. All right. All right, so get yourselves in. Let's look at the charts here. Now I'm thinking to switch over, guys, to my other laptop, but I have some analysis that we have going on here. For those of you who saw the live analysis, students, but we're going to go through what we're looking at the moment. I'm going to pull up some fresh charts here so that we can go for it. All right. Yeah, so let's go over and see what we have here. All right. So I'm going to start off with USD Japanese yen. All right. All right. And then after, we're going to look at some Japanese yen pairs to see what's going on from there. So let me hit record. Let's go. Okay, so welcome to another live analysis session. Today is Thursday, 19th of August, 2021. So I'm going to start off with USD Japanese yen, and let's have a look at what the price action has done. So we've had a very strong short today on the Japanese yen. I see that the price has reoptimized the H4 order block here for demand, and we've seen the price return back to this region for a short. And it looks like we're going to have a short continuance here. I mean, over here, when we look at the price action from here, the price returned into demand, and the price action here suggests to me that we're still going to come back slightly lower. Now, on my charts on the H1, at least, there's a liquidity gap showing up. And I remember when this happened, this was from some CPI news that we had come out. The price gave us a long from that region here. And I'm expecting the price to push and come back short. Now, this is why it's good to look at different structures of price, because I mean, if you use the hourly to look at this same area as to why did the price reverse here, there's not much you can really pick up on apart from algorithmic stuff, which is not so easy to analyze if you don't have the skills for that. But on the H4 structure here, we can see a bit more clearly what the price is doing. And I do expect the price to pull back short. So I'm looking for a continuance on the short side for USD Japanese yen. Now, the price has come very close to the low of yesterday, but we haven't really seen any activity there. But I do believe the price should get there in the next hour or so and continue. But looking at what we have over here with USD JPY, I definitely want to see the price push short. I do think the price is going to get past here for several reasons. So from here, expecting the price to push short, let's have a look and see what we have going on. Now, we had the FOMC minutes yesterday. We had kind of a reaction, but not the reaction that everybody was expecting, which I did say, would be the case. So I am watching carefully to see what we need to do. And from here, we can see that the pound is still heavily bearish. All right. Now, again, let's break this down again from where we were. Now, the pound is pushing short and potentially could be breaking even heavier, even more heavily short as to where we are. We had this very important piece of price action here, which was what we were expecting, why we took the short a few weeks back. And now the price is still returning here. Now, from the weekly structure here, we're still within demand. The next available demand zone is quite far down from this where we were. So if I go right here, all right. At the beginning of the year, we had an interesting induction for a long, and then that was followed by a second one for another inducement long, which took us to the previous all-time high for the year, which was right up here. Let me just grab this and delete that. So then from that point right here, I expect the price to really be made. We saw that the price after this produced a short Okay, we had an accumulation range, a minor one, and then the price continued to push short. So where are we right now? Now on the daily structure here again, if I start from the daily structure right here, here's the A swing, and here is the B right here. And this is the market structure break that we've seen over here. So from here, I mean, from the daily time frame, I know we're still bearish if you were to look at it from this way. We haven't really, but from this point, from the swing, the first swing we've seen a market structure break off here is the most recent swing high for the month. Now, as I said, looking at this, I would have loved to see the price break here. Now, this is exactly 1 micro pip less than 1.40, this high right here. So if I put this right here, I would have loved to have seen a market structure break to the pushing of price right up here. But to me, we still have a clarification of bullish structure on the daily time frame. So I'm willing to say that I do think that we can potentially get along here. I know that the price looks bearish, but this break of market structure here is just that, of course, a better confirmation would have been a body close above 1.40, which is a psychological level, all right, to start off with. Now, the price, again, made a silly mistake by not reading the price structure here, and we could have caught a very beautiful short from the moment this week started, literally, to where it is now. Now, the price approaching short here is approaching on the H4, the demand order block, which triggered the long move from the 20th here. So if I was to cage the price in here, we have two H4 areas. We have a larger one that I've just drawn out and this smaller one here. So my expectations is that now I'm going to put Fibonacci here for a moment. My expectations is for the price to pull back down to lower levels, either 78.9 or the 86 retracement area here, and then provide us a long. So for me, looking at the price structure here from the weekly is more towards the bullish side than the bearish side. It's just that this very strong short at the moment is showing up as a very strong bearish cause for the price to push down lower. Now, in terms of COVID, in the UK, which is where I'm from, has been a rise in COVID and the Delta variant, and there's actually talks that even if you've been jabbed twice, you can still catch the Delta variant. So it's more of a thing where with COVID, there's still uncertainty. And that uncertainty, coupled with the fact that the US dollar is in talks for, a US dollar tapering, is pushing the pound versus the US dollar down quite strongly. Okay. So for the cable, I would still take the risk of taking a trade here, not of this. My position size will be reasonably between 0.5% to 1% risk. And just to observe what the price is doing. I would like to take the chance on this trade. This is one of those trades that is worth losing the trade, because if the price does flip the other way and continue beneath this order block, then we can capture a very good sell. And that would mean that the continuation sell we're going to see will be coming back down to 1.31 and beneath. But at the moment where the price is, it is a potential sell, and I don't want to pass up the opportunity because of the fear of losing a few pounds. Okay. I think it'll be worth taking the trade from where it is. So I'm keeping my eyes peeled. I'm still looking for, where the price is going to get its strength from to probably provide a bullish movement. And now when I get to the H1 here, the H1 zone, I think I have a very good clear area. So in terms of where the stop loss placement will be, there's quite a few interesting areas here. I wouldn't let my stop loss be 57 pips. There's just no chance of that. My stop loss range will roughly be around about 10 pips here to the edge, which is about, I'd say 20 pips. All right. I don't mind having a stop loss of 20 pips. It's just that the risk to reward has to be palpable in order for that to happen. Now, this move here, if this is actually the move that we've been discussing, for weeks on end now, then there is the potential that the price actually is going to give us a very strong long. And this very strong long will be a continuation into higher highs. And the next point that the price will be really going to attempt for would be the 2008 high right here, 1.43. And then the next high, which at one point or another needs to be filled, which would be, as I've always said, a pound at $1, 1.50. Now, it really does depend on what goes on here. I'm interested to see. At the same time, we do have to remember, and I am keeping this in my mind, this supply zone here from 2008 is where the price is operating at the moment. Okay, this is what's causing the price to push short. That supply zone is providing a huge amount of liquidity. So ideally, if this is going to be the long, then I mean, again, from the H4 structure, we can see the lower low formation. That's the thing. But because of where the price has stemmed from, and we've kind of broken the last previous swing, I'm willing to give this a shot for the price to give us a long. If it doesn't and it's going to break short, then again, we have a very good short trade either way. So I'd say keep your eyes peeled and let me know what you think about the price action here. And then after, we can go from there to see what the price does. All right, so Euro USD again. Now that the price is broken beneath here, as I was saying to you, that even though there was a cause for a long, I did get the students to close because I could see that the bearish pressure was just too much to contain the price. And now we're getting back to this, my favorite area. Okay, as I told you that there were some inefficiencies in the price that was created from November 2020, which one of them was this spike that we had when we had the election, when it was election day between Donald Trump and President Biden. And for that reason, and let's put it here. For that reason, I'm looking for the price to range between this area right here and for that, depending on what the price does, then we'll be able to observe what goes on. But definitely Euro USD is a short. We had a very strong spike here. And to observe what the price was actually doing, it'll be good to look on the 5 minutes to see where this spike really took off at. So this spike right here, the price returned back into this area of supply right here, or close to this area of supply, and then took off back short again. Now from the higher time frame right here, when we look at the price action, and I'm going to put this right here. From the higher time frame, I'll put this. Yeah, that's better. All right, so from the higher time frame here, I'm going to start with the H1 to make it easier for you guys. That's why I was pausing a little bit. So on the H1 here, let's observe the price action. So demand pushes the price for a very strong long up here, which is what we had on Friday. And then we see the price breaking past this same area of demand, which triggered the long. And then we've had a break beneath short. We've had a return back to this point right here after this. And this was definitely to stop traders out on the short side for sure. So this is one of the opportunities that the market will take in a moment of news like this to stop traders out. And then we see from that movement, we get the short after, which I expect to continue. So now the euro is already weakening, and I'm bearish again fundamentally on the euro, but looking at Euro USD, I do expect the price to continue in this direction short. So on that note, when the price gets to this structure here, so if I'm going to go to the H4, that will probably make it easier. Let's go back to what happened here. So the price action that we had here from November, all right, we had some market inefficiencies and the price is coming back to deal with them, I believe. Now, if we break past this area here, so let me go back to here. If we break past this area here where we had this November movement of price action, then I'll be expecting the price to be rallying short continuously for quite a while. So the demand zone, let's put this here. I'm going to have to add the wick just to clear this up. So the demand area is this right here. If the price breaks beneath 1.16315, so if we get this price action here, we're about to see a very strong rally short on the euro versus the US dollar. And it's going to get back to the original targets that I was looking at. And this means that the reversal signature for the yearly time, or for the monthly but yearly structure, is holding true. Now, I think up here we can see it already that we're having a formation of lower lows here, okay, which is forming this kind of trend line structure that I'm drawing. But we can see the formation of lower lows. At the moment, this first swing from A to B has a value of 640.8 pips. And at the moment, from the C swing down to where we're at 596. So we're not too far away from at least having the same length of the A to B swing to the C to D, which to me, 640 is roughly around about here. All right, so just beneath this area, which means in order for this C to D trend to continue, it's going to have to break beneath this area. So I'm actually poised for a sell. Any re-entry that the price gives around this period of time, if there is a pullback, that would help. But any re-entry we can get short on Euro USD, I'm definitely going to be looking for the short. Now, from the weekly structure, or if I use the daily structure and scroll back a bit here, for the short, my next target is going to be in this region right here. I believe that we have a very strong void of liquidity here that will be filled out on the short side. And my next target here, now this void of liquidity was from the stimulus announcement that happened last year when the European Union kept interest rates at 0 and decided to have a stimulus package to bring life to the economies in the European Union. Okay, so that caused the price to be very strongly bullish. Now I expect the price to come back here and at least to this demand zone. So there's another, from this point, another 250 pips roughly that the price can really go for. And I'm expecting to see that in this run. The other target, which the price might even smash this target and get even lower, is here. This is the next second area of supply. This supply zone here, it was formed during the coronavirus period, which pushed the price down for the lowest leg short that we saw, which was all the way back down here. Now, I believe the price is actually going to get beneath this area. I expect Euro USD to become almost 1-for-1, close to 1-to-1. I expect the price to get there down to this area at some point. But in terms of targets, target number 1 is definitely going to be here. And I would say target number 2 is definitely going to be beneath this area. So what I'm going to do, all right, I'm going to put this here. I'm going to run this here. And let's put this right here. So right there would be target 2. So I'm going to write this out. If you're a Euro USD trader and you're looking for the direction that or what you think I'm looking at, this is what I think. I definitely believe that we're going to have 2 of these targets at least. And beneath this point, the reason why I know it's going to most likely do more is because there's a large liquidity void, from the stimulus coming along. And so target number 3 would actually be beneath this low here. I think we have a very brilliant trade on Euro USD approaching. It's just how the price is going to achieve that would be the question. Now, again, even though we've had this short, the only thing I'm still watching out for, and I'm hoping the price may possibly do, is still give us this A to B, just give us a 1 retracement long, and then after give us the short. So keep that in your mind as we're looking at Euro USD. And let's see what the price will do there. So AUD USD again, we already knew it was going to be dropping. We've done the discussion over the price action here. So as you can see now, the price is getting now down to the areas we were looking at. Now we have a few areas that we were looking at. I'll start off with the highest one. So let's put this here. So on the weekly time frame, demand is locked in right here, and the price is not so far away from it as it was at the beginning of the week. All right. We had really the trigger for the price action at this algorithmic area here, which was a very beautiful pieces of price action. Now the entry for this actually happened on Friday, and you would have had to swing it over the weekend for you to take advantage of this trade. I personally wasn't looking at AUD USD, so I didn't have the opportunity to grab that trade, but it was still a great one. So as you can see, guys, the range of accumulation has finally broken here. Here it is. So this was our accumulation phase. So this is just a redistribution of liquidity short. This is what we've had right here. And now the price is making its way down to the first area, which is a respectable area. And remember, I said to you guys, inefficiency is at the 70.5 cent mark. And we're getting close to it. Okay. I do think the price has a few more pips to go. We have about 120 to me. Yeah, 114. So not too far. 114 pips away to get to this point, so we can see what the price does here. And it might strike and give us a long, or the price may continue short and get us to the next levels of price action. Now, on the weekly time frame, which is what I'm primarily using for now, we have another supply area. There's two. There's one supply area here, which is where the price broke above to continue to go long, and we have one directly underneath here, which is the supply zone from the coronavirus period. Now, the price broke above this area, but we didn't really get the return, or if you want to call it a retest, to the other side. So I'm wondering if the price is going to take a dip, dive down, and then come back up. We will see. But definitely, I'm still bullish on the Australian dollar, US dollar long term. I'm using this trend line here to give you a graphical representation of the price action. But from where we are on the monthly time frame, we have the A to B swing here, and here's the C, and here's the D swing. The wick over here wasn't a body close beneath the low, so the bullish structure still stands. If the body of the candle had closed beneath here, then we would have had, a break of market structure, but we don't. We just have a lower swing form, but this is still the sweet swing. So we have an A to B movement, and here's the C. And now that the price has done this movement long, is broken this trend line that we've had. This is a trend line that's been around for quite a while. These swings right here from the price pushing down lower, I'm expecting to see the price actually move further lower. We'll have a look at that. No problem, Abs, for sure. So for me, looking at where we are on the monthly time frame, this also is a major area of demand from the monthly perspective. And there is a supply zone slightly higher up here, which is the last, basically December supply in 2019, where the price was broken above and returned. And now we're approaching the same area. So we could potentially actually just have a long from this monthly narrative, and that will be it. And we'll be looking for a long. So I'm going to let AUD/USD ride down and do what it needs to do. I wouldn't try to capture a falling knife, as we would say, but I'll definitely be keeping my eyes alert. And I'm just going to set an alarm here for when the price starts to get close to this area. So this is my first alert for the day, guys, that I'm looking at. And I'll be watching to see. Now, let's have a look at the rest of the majors here. So USD CAD, all right, has been fantastic. Now, it didn't trigger the pending order. If you guys remember, I had an alarm set. All right. Here's the algorithmic level price that we're looking at. We see that the price forms demand on top of that. All right. And here's the key that was the most annoying thing that you could ever expect to happen. So if I zoom in here, price action is very specific. And I do think this is purposeful. When this price spiked down to this demand zone, it hasn't returned into or spiked towards it. It didn't return into it. And so this long that we're seeing here is all institutional sponsorship. Every candle is blue. There isn't hardly any resistance to buy in, apart from what we have in Asia. But as soon as we get to 12 o'clock, this is an institutional sponsorship kind of long. Now, when you see something of that nature, then this is market manipulation at its finest. My expectation was for the price to return even just a bit into demand. So the long that we're seeing here is not triggered by the demand from the normal order book or the normal order flow. So this is a market imbalance, which is going to have to be rebalanced soon. So positive news is that there's a sell coming along very soon. Now, the price has already hit our first target here. And the first target is right here. This is our first target. So our first target here is the supply zone that we were looking at. Now, for me, really, with USD CAD is probably one of the best trades I've been waiting for a while. I'm going to use the same daily area here to map out where we are. So we have a special type of demand supply zone that has been formed here with an induction short. And now that the price has come here, really my targets are, I'm expecting the price to come and take the high of the previous month here. If we get this high reversal signature above this high, guys, then the sell we're about to have on USD CAD is going to be absolutely beautiful. Okay, from the market structure, we are still bearish, okay, for now, anyway. And there are still lower down lows that need to be run and areas of demand. In order for us to have a strong long of this magnitude, we're going to need a lot longer of, we're going to need a lot stronger or a long or a place of demand that is a lot stronger than where the price has reversed from. This reversal here is a beautiful one. I love to see how the price has behaved here, but even then still, there's still parts of the price action that haven't been filled out. There's still inefficiencies in some places. So right now, I want to see the price take this high here. And I believe that probably the entry is either going to appear on Friday or on Monday. So USD CAD, I've been poised for it for so long. I've been waiting patiently. Now, sadly, the long didn't trigger. It didn't come back to our area. We just needed a slight deeper dip. It didn't do that. which is fine. But the short that we're gonna get on this will be able to make up for, what we've seen here. So either way, price action to me is gonna be a lot better on the short side than the long. So if I bring this up here and I put the A right here, so here's our A swing from where we are, and here is the B structure, which provided the stop hunt reversal signature, okay, type of reversal signature that you can get. And then we've had the C swing right back up to here, which is what I'm expecting. Now, I'm not going to use a Fibonacci. I don't think it's necessary because there's only one real supply order block that is the price is using. So in reality, I'm going to be looking for the price to get here. So I think we have a little bit more on the price action. It's okay, Abs, you're good, bro. And then from there, we can continue moving forward with the price. So let's see what happens here. All right, I'm going to put USD CAD out for now. There's nothing we could do with it until the price reaches that high at least, which I believe that is going to be possibly able to do at the end of the day. And then we can start looking for the short. But I'm very, very excited about USD CAD because that's money right there. Well, and with USD CAD, I'm looking to swing this trade from where it is all the way back. I'm not going to close it for a very long time. I'm actually going to allow this to be one of my largest swing trades I've ever done. And I'm getting myself funded, guys, soon. So I'm going to probably take this on a funded account as well. It's going to be an absolute killer of a trade. So let's see what happens here. I'm going to finalize and look at NZD-USD here before we get out of here. And let's have a look at what's going on. So NZD-USD, very similar position to where we are with AUD-USD. Again, the accumulation range has now ended. And as I said to you guys, that the key for us to know that NZD-USD was going short, as I said, is even though we have an accumulation range here, that the swing points were pointing towards, lower lows and lower highs. If I just use a trend line here just to help you see where we are, these are where we were going. You can see the price is forming that pattern. It's not the nicest. I mean, you couldn't make a channel with this, but it is kind of clear, especially these main points here. So here's the A swing, here's the B, and here's the C. So the price accumulated for a while, but in order for this short to really have the short potential that we're seeing right now, it really needed to have, some sort of piece of news or some news that would help to cause the price to become short. Now, New Zealand, by the way, if you haven't looked at the news, didn't change their interest rates whatsoever. New Zealand kept their interest rates exactly the same. Okay. And so New Zealand keeping their interest rates exactly the same. All right. The only thing that we saw is that the talks of them, I don't know how far they took the talks, but the talks of, or the fact that there was a consensus for a 0.5%, so a 25 base point increase, this makes me think that most likely there are some aspects to this which make me wonder a little bit about their activities, because the fact that they had, a consensus of 0.5 and it came out worse than expected, I think is a manipulative move to allow the New Zealand dollar to short more, because if the interest rate had increased, that would have been a massive sign of a recovery in the economy, because now they've increased interest rates because they're trying to curb or to manage the economy in line with COVID-19. So this was the news that the market was waiting for to provide such a short, and this is why the price is going to where it is right now. So, and I do expect this to continue. So I'm going to take off these lines because I'm not going to be using them to make any trading decisions. But on the D1, all right, this is where we are right now. And as I said to you, this demand zone was a real crucial place. Right now, the price is still inside of this area, but it looks like it has room to be breaking out. If it is going to break out of this area, if there's any return tomorrow, then we could get a return back into this area and then a continuation short. And I believe with NZD-USD, even though there is a long pending, a very strong one coming along soon, take off this line here, I do think that we are poised to continue going for a short. And I believe that, if you're a trend line trader right now and you drew this trend here, the reason why I think that the market is going to give a heavier short is because if I draw this trend line from where it is, okay, now the algorithm of the market can geometrically analyze trend lines as well. It's just a few bits of mathematical models that they need, and they can create price action that follows a trend line. Now that this trend line is broken here, if you think of it this way, most retail traders will definitely want to be short on NZD/USD right now, especially the fact that if you notice this trend line I've drawn yesterday with the FOMC news, the price spiked back here. Now, from a supply and demand side anyway, let's put this here. The supply and demand side here, the price used this demand zone as an area of supply. We had a reoptimization. But if you're looking at this trend line as a retail trader, what would you be thinking to do? Either a very strong sell right now, so you'd be looking to sell, or you're going to think that the price is going to retest this and go this way and then go short. This is what you're going to think. So for me, the market algorithm is probably going to be thinking of how it can manipulate traders a bit better. And I believe that one of the ways it's going to do that is by using this specific, very specific trend line. How the price behaved on here, to me, is very cleverly done. And so now that the price has broken this trend line, everybody's going to have a bias of bearish on NZD/USD. So tomorrow, I think most likely the best thing to do, though, the market will do, would be to do the opposite and start reversing the price a bit. So if you see that happen, if the price continues, then let it continue. It's not a problem. But if they wanted to be mean, they could do that. So I'm just keeping you guys aware of where we are right now. But we definitely are bearish right now on the NZD/USD side of things. All right. So I hope you guys enjoyed that on the YouTube, guys. I hope you enjoyed the analysis. I'll see you guys tomorrow, same time. And everybody take care and enjoy. Watch this as many times as you can, and I'll catch you guys. If you have any comments, put them in the description